I think there's so much information out there and so many people automatically think they should be an S-Corp. I didn't convert to an S-Corp, I don't think until my 3rd year in business. Were you an S-Corp right away? Probably not.
I was, because I didn't understand the difference. And my accountant set it up for me and said, you're going to be an S-Corp. I'm like, awesome. That sounds really official. I wish I hadn't.
So how am I doing so far?
Episode done.
You haven't needed to interrupt me or move on yet.
You're just in your introduction. Let's get to point 1.
This is profit. Remember what I said. I am not talking about gross revenue.
I love that you put this part in there as to who should use the S-Corp versus the LLC based on their income. Listen up.
I had to determine what is my reasonable wage that I could justify if I was audited. So what is your salary? Are you going to say that? Like, what do you pay yourself?
Yeah. So I put it down as your buddy at the gym told you could save money with an S-Corp just because he did. Your accountant said you shouldn't bother. Who's right? Both of them. And we'll tell you more. Welcome back to another episode of Playbook of the Wealthy. My name is Dave Grant. My high-end flight attendant co-host is Heather Townsend. And we're going to talk to you today about whether you should be an LLC, an S-Corp, or none of the above because your business doesn't warrant having either. So, without further ado, let's dive in.
Okay, when you read this brief that I put together, we call our episode outlines briefs, everyone. What did you think when you read this brief? So we can warn everyone.
I thought that 3 people were going to love this episode.
Oh, come on. I think you called me a humongous nerd. Nerd alert. Nerd alert. Like I went too into the weeds? Yeah.
Mm-hmm. Yep.
And I heard you say that I'm a high-end flight attendant. So do I fly private?
Nope. Delta.
Okay.
That's high end in my world.
All right. There are a lot of questions, a lot of people going back and forth, like, gosh, is on social media giving so much tax advice that should not be giving tax advice, I also want to say. I want to just break down when someone should be an S-Corp. And there's also a lot of confusion when you're an LLC.
Mm-hmm.
We're going to go into it. But I have to tell our listeners, I gave Dave the full right to interrupt me because I went really deep into the weeds. We don't want to put you to sleep.
I'm protective of our audience.
Yes.
Mm-hmm.
So I'm not sensitive. I have given him full, what is the word? Full reign to interrupt me, to cut me off, to tell me to move on. And so no one get your knickers in a twister. It is allowed.
We're friends.
We're friends.
Now
Very good
and forever.
Friends. All right. So we're going to start really high level. When I'm on a prospect call or talking to a friend or whatever, and I ask, well, how are you taxed? They say, well, I'm an LLC.
Mm-hmm.
Yeah, you heard that annoying squawk sound right there. That in no way, that's already where people are so misinformed.
Mm-hmm.
So let's educate you. So an LLC that's for liability protection.
Okay.
It's a legal entity structure, best way to put it. It does not state how you are taxed. You dictate to the IRS how your LLC is taxed. An LLC can be taxed in many ways.
Okay.
What? Did I already go too into the weeds?
No.
What?
Just keep going. Because I already feel this is gonna be an episode here.
A good one, a bad one? Where are you leaning?
I'm trying to direct it the good way.
Okay. So if you have an LLC and you don't dictate how it's, you don't do an election form, let's put it, you're either going to be taxed, if it's just you, Schedule C on your 1040. You're not going to have a separate tax return.
Okay.
For it, okay. If you have a partner, so if we had our own entity for this podcast, we would probably be a partnership return. Okay. Mm-hmm. So an LLC can be a partnership, can be Schedule C, sole proprietor. As an LLC, all right, you have to file an election form to be an S-Corp. You have to tell the IRS, I want my LLC to be an S-Corp. You also have to file a form if you want to be a C-Corp. You have to tell the IRS how your LLC is taxed. Did I make that clear? Can be any of them.
You did. By making an LLC, it doesn't change your tax situation at all.
You have to tell the IRS how it is.
Okay.
So when someone else asks you how you're taxed, do not answer with, I'm an LLC. That is a legal structure. Okay. It's important. It protects your assets, but it has nothing to do with taxation.
I mean, we just corrected half of the TikTok and Instagram videos out there.
I think there's so much information out there, and so many people automatically think they should be an S-Corp. An S-Corp is a great structure, but I'm going to talk about me personally. I didn't convert to an S-Corp, I don't think, until my 3rd year in business. Were you an S-Corp right away? Probably not.
I was, because I didn't understand the difference. And my accountant set it up for me and said, you're going to be an S-Corp. I'm like, awesome. That sounds really official. I wish I hadn't, but it is what it is.
So the point that I want to get across is if you are growing a business, and let's say you are pumping a ton of money into your business and you're not very profitable, an S-Corp, you probably shouldn't be an S-Corp yet.
Mm-hmm.
There is a threshold. The biggest reason is to save taxes, and S-Corps can save taxes, but you again have to be at a certain threshold. All right. The other thing that I have to say before we go through this is we are not talking about gross income. That is the other thing. You determine if you should be an S-Corp based on how much you are profiting. Profits is what matters here, not gross revenue. You could be making $1 million, but if you're profiting $10,000, it should not be an S-Corp.
Good thing to note.
Okay. So how am I doing so far?
Episode done.
You haven't needed to interrupt me or move on yet.
You're just in your introduction. Let's get to point 1.
Okay. So what are these tax savings that everyone is talking about with an S-Corp?
Mm-hmm.
For ease in many of my examples, I'm gonna give the example of an LLC that is taxed just on a 1040. You are not an S-Corp. You are just filed on Schedule C. Then you decide to convert to S-Corp. This is the typical how it goes in most situations. Sure. So as I was just starting out my business and I was profiting, when you are a Schedule C, not an S-Corp, your profit, you pay your ordinary income tax brackets, whatever they are, plus self-employment taxes on all of it.
Mm-hmm.
That rate is 15.3% because you are a business, so you pay the employee portion and the employer portion. All right. And that is when we talk about self-employment taxes, if you are a W-2 wage person, that's the Social Security and Medicare taxes. You only pay it on the employee side. As a business, you have to pay the employee and the employer. All right. So Schedule C, you make $100,000, you profit, you're paying your ordinary income tax bracket plus 15.3% on that. So that's $15,000 in taxes. Okay. Now let's say you convert to an S-Corp and you have that $100K in profit.
Mm-hmm.
For ease, we're going to use always the 50-50 split. So as an S-Corp, you have to pay yourself a W-2 wage.
Okay.
So you now have payroll for yourself, all of that. So you're going to run a $50,000 wage for yourself, and you're going to have $50,000 just as profit distributions.
Mm-hmm.
So you only have to pay that 15.3% on the $50K wage. That other $50,000, you just saved your 15.3% self-employment because it's not on the profits. So that is so you probably there saved what, $7,000 in taxes about high level, 7.5. That's the tax savings everyone's talking about. Was that clear?
Yes.
Wow. Okay. We're only on point 1. Okay. But that's not the whole story. And that's also why I really wanted to go and do this episode, is that's one of many factors of making this decision of whether to be an S-Corp or not. So let's go through some that I think gets missed a lot.
Okay.
Number 2 is the cost of running an S-Corp. Right away, I'm going to tell you it is more expensive and it is more complex.
It's a pain in the butt to run my annual meeting with me, myself, and I, and take notes and file my annual meeting notes.
I can't tell if you're being sarcastic or not.
Takes me all 5 minutes to run that meeting.
Okay. Are you trying to say that you don't think it's more complex to be an S-Corp?
Well, if I was an LLC, I'd never have to run that meeting. But because I'm an S-Corp, I have to.
Okay. So running an S-Corp, not only is it more complex, it also costs more money because you have to file a separate tax return. Mm-hmm. You have to file the 1120S. So not only do you have your personal tax return, you now have a completely separate business tax return.
Yep.
Before you were an S-Corp, it was just included in your personal return if you were Schedule C, filed on Schedule C. Most S-Corp tax preparers, I think, charge somewhere between, if they're good, which we're going to assume, they start at what, $1,500 a return, would you say? What do you see? 1,800.
Sure. Keep going. Don't ruin your flow.
Okay. And then you also have to run payroll. And so let's just use Gusto. That's the payroll software I use. I think they charge me $50 to $60 a month to file the payroll tax forms, all of that, and run payroll. So you're at $600, $700 a year just in payroll.
Okay.
So you have the extra tax return plus the payroll costs. So you're at what? Let's just round up, 2,500-ish all in of extra costs, okay? Also, when you run payroll, yes, you save taxes on the distributions that you didn't run W-2 for on the S-Corp, but you still got federal unemployment and state unemployment. And when I'm an employee in California, that can be costly.
Mm-hmm.
So there's some other factors to go in there. Also, in California, there's a franchise tax for S-Corps, a 1.5%. It's $800 or 1.5%, whichever is lower or higher, I mean.
Yeah.
You have to pay.
There's Illinois too. We have that.
Oh, I didn't know that.
Mm-hmm.
So I just want to bring that up. So there are some other factors into this. So it messes up with the break even. You need to take that into account.
Those tax savings are eroding quickly.
With the costs, yes. So you need to run that. All right, here we go.
Point number 3, buckle up. Viewers, buckle up.
I'm going to drink my coffee for this one.
I feel bad for you.
I'm not going to give my examples if you don't want me to. I mean, if you should look at my brief, it's like this long of like what I started going on a tangent. Okay, so there's QBI, Qualified Business Income Deduction. This came about with Trump's first bill when he got elected in 2018. Basically, businesses, for high level, I'm just going to go, there's many caveats, there's many things to this, but I'm going to go with simple first.
Mm-hmm.
There is a 20% business income deduction on profits. Okay, so you make $100,000 profit, there's 20%, $20,000 extra deduction on your business income.
Perfect. Well explained. Point 4? No? Okay. That was a soundbite right there.
Okay, well, did you hear that I said profits, though?
Mm-hmm.
Okay. So if you're an S-Corp, what do you think happens to the QBI deduction?
Tell us.
For ease, let's say you're in a lower income S-Corp. I'm going to say lower profit.
Mm-hmm.
Your QBI is only on the profit portion, not on the W-2.
Okay.
So you cut your QBI deduction in half because if you're running, 50-50, let's say.
Mm-hmm.
Okay. So really, you need to also be running this with what did this do with my QBI deduction? I have too many examples. I'm already looking at the clock. I'm not going to go through them.
Don't stress yourself out. You've got time.
Okay. But also it really flips too. So there are many things with QBI. Like, are you a specified service, SSTB? I forget what it stands for.
You have an STI. Yep.
No.
Sorry.
But like for me and you, if we make over a certain income, we don't get the QBI anymore because we're part of this specified service.
Yes.
So then that goes out the window. So for high income, and then if you aren't an SSTB with QBI, I know it's
word salad. Yes.
As you raise income profits, it switches where the W-2 comes back into the calculation. So this is the QBI calculation. I have a whole spreadsheet just on it itself.
Mm-hmm.
All I'm trying to say to people to give knowledge is running this is not just as simple as like, oh, it saves self-employment. You need to take into costs, and now you need to take into the QBI deduction. That's where I wanted to discuss. And
Perfect.
And it depends really how it's going to affect you on where you are. Are you a specified service business, and what income or your profits are?
Great. Moving on.
Okay, great. Okay. Oh, I love this one. PTE. Why I really like this is in most states, you can't do this if you're just filing Schedule C. You actually have to be an S-Corp to get the PTE.
What are you talking about, PTE?
I will explain. So before OBA, the latest tax bill in 2025, we were limited by how many state and local taxes we could deduct. It was the $10,000. You couldn't, if you had more property taxes, you paid more to state. Anything, you could only deduct up to 10.
Sure.
Now it is raised to 40,000 if you make somewhere, unless you make over 500 to 600,000, right? There's a range, and then it goes back to 10. Well, some of my business owner clients can't, they are over that income threshold, so they can only deduct $10,000 of state and local taxes, and they pay way more to state and local.
Sure.
So what can you do? States have gotten smart and allowed businesses to pay the tax on the business profits at the state level. So you get the deduction federally on the business.
Okay, one more time.
I know. So let's say you're making a ton of money. Let's say for ease, it's $1 million profit in this S-Corp.
Mm-hmm.
So they can only deduct $10,000 of state and local. So they're not getting any, that their proper taxes alone take
on
that
their
up.
personal return.
Yeah, take that up.
Mm-hmm.
So on their business income, they aren't getting any benefit federally for the deduction on paying state taxes. So they elect PTE. For ease, let's say it's 5% is the PTE tax in the state. Well, Arizona, it's 2.5. We'll use Arizona because that's right, 2.5. So my clients pay at the S-Corp level 2.5% on that $1 million profit. So what is that? $25,000? That is literally a deduction in the business.
Okay.
So they made $1 million. Federally, they're only going to be taxed $1 million minus $25,000. Are you with me?
Sure. Keep going.
Okay. So they get the benefit. They wouldn't have gotten that $25,000 deduction unless they elected PTE. That's like the best way I can put it. It would have been lost. So they get the deduction federally. And so if they're at a 37% rate, $25,000 is huge.
Sure.
That's like, what, $10,000 in tax savings right there?
Mm-hmm.
So if you are on Schedule C and you're not an S-Corp, most states don't allow you to do that unless you are an S-Corp or a partnership.
This doesn't work if you're at lower income in your S-Corp, does it? Or lower profit?
It's not as beneficial, I would say. And you're probably not maxing out on the SALT cap on federally. So it's not as big of a benefit.
Okay.
I do PTE. Many of my clients do PTE. It's very helpful.
A lot of things have to fall into place for that to work, personally and professionally.
Well, like, look at this. In California, I'm going to give this example. At a 9.3% tax rate on a $500K profit, so that means my 2.5 was too low. Now that's going to keep bothering me. But anyways, that's $46,500 of tax, like, of a deduction that you would have missed.
Mm-hmm.
That's huge.
Mm-hmm.
So, like, okay, PTE. You got to take PTE into factor. Okay. And I have seen CPAs have not caught on to PTE. That is something that gets missed. I have to bring it up to my client CPAs as their new clients. Okay. Kids payroll. I'm only going to go over this really quick. So my clients pay their kids on payroll, some of them.
Mm-hmm.
One of my clients, we kept them as Schedule C, did not convert them to S-Corp because through Schedule C, you can still be an LLC, but you don't have to pay the FICA tax. The 7.65, and then you pay it as the employer on your kid's payroll if you're a Schedule C, but you do on an S-Corp. I don't know why. Weird rule. Okay? Did I just...
So it's like a flip-flop of...
Yes. Okay. So I took that into account when we were deciding this. This is one of my reasons. My client is profitable, but it did not make sense. Now, there is another thing. You could do like a family management company to get it out. It adds complexity, whatever. So there are ways around it if you're an S-Corp and all of that, but point being, S-Corp, if you want to put your kids on payroll through the S-Corp, you're going to have to pay payroll taxes on their wages.
Mm-hmm.
If you kept as Schedule C, you don't.
Okay, interesting.
Unless you do a family management company. All right, so that was another one. Retirement contribution calculations are different.
Mm-hmm.
I'm going to use S-Corp or solo 401ks because I don't like SEP IRAs.
Me neither.
Me neither, so we'll just do solo 401k. But Schedule C, you have 100K profit. The calculation on the employer portion, 25% is on the 100K profit, right? If you go over and you're an S-Corp, it's only on the W-2 wage, that 25%.
Okay. So if you want to put more in the employer portion of your 401k, you got to pay yourself more.
In the W-2. So the calculation is different, right? Like if you're Schedule C, the calculation is on 100% of that profit, minus self-employment taxes and all that. Definitely have your CPA run it. But it's bigger, right, of the profit. Whereas with a S-Corp, you can only do it on the W-2 wage. That's what the profit doesn't come into calculation.
Sure.
As a solo 401k on the employer portion.
That gets annoying because now you're having to pay more in payroll taxes to be able to put more in your 401k. Sometimes that probably won't work as a math problem.
And it has to be run. Like, how much do you need to be put away? If you don't need to fully max out your solo 401k, then is it that big of a deal? All right. Also, with an S-Corp, you can do the accountable plan, and there's a lot of you can do the Augusta rule. There's a lot, this needs to be done right, but there's a lot on social media about that right now. But really, you need to have an S-Corp to do that. Schedule C, it's really hard. All the research I do, it's really hard to make that case of the Augusta rule. S-Corp is treated more like a different entity and all of that. So you can do the accountable plan. So
this part is really important on the income. I love that you put this part in there as to who should use the S-Corp versus the LLC based on their income. Listen up.
This is profit. Remember what I said. I am not talking about gross revenue. That's also where people mess up. So these are profit. After you take your money in, your expenses, what is your profit? If you are under 80K net, it probably doesn't make sense. Okay. If you're somewhere between 80K and 150, it depends. Marginal benefit to convert to an S-Corp.
Okay.
It needs to be run though. 150K to 400, usually yes. My client, it was a no.
Okay.
Because of the kids' payroll. 400K, almost always yes. If you're making 400K and over, almost always yes.
I wish I'd have known this when my CPA said 13, 15 years ago, let's make you an S-Corp. And I'd be like, no.
Yeah, so in my first 2-3 years where I'm pumping a ton of my money into, and I'm not making as much because I'm building and I'm pumping in to reinvest, I didn't have huge profits in my first 2 or 3 years. Hence why I wasn't an S-Corp. It didn't make sense. And then at some point, it did go over that threshold where it was a very significant impact in my tax savings, and that's when I converted.
Yeah.
But I didn't add the complexity. Luckily, I don't have to pay another CPA, but I think that this mistake is made a lot. Why I want to go through this is there are a lot of tax preparers out there today. There's not a lot of people that sit down and actually run this well. So I'm having this conversation right now with a client in California, and she makes really good money, but she also is pumping a lot of money into her business. So her profits are lower.
Right.
Me and the CPA got on the call and we're like, with the franchise tax, with the payroll tax, the complexity, the cost that she'd have to pay the CPA, it did not make sense yet. Then I talked to her and I'm like, okay, well, what are you thinking this year? And she's like, I actually might have a bigger year this year. And we're like, ooh, mid-year tax planning meeting, let's decide, let's run it. We are running it though, to make sure it makes sense with all of these factors.
Sure.
And she was like, Heather, I might want to do the Augusta rule because I'm having, events with my clients at my house. I was like, good, I need to know that. That comes into the entity. Which one makes sense? I want to put my kid on payroll. Great. That comes into this. But I'm like, keep telling me all the things that you're planning and thinking that you're going to deduct because that is telling me how I'm going to run this.
Yeah.
And I wanted to use that example of if someone's just like, oh yeah, you just pay on the self-employment taxes, you save. I don't think that's just the answer.
Time's up. Give us a bow.
Of the ones that I listed, understand which ones, just like I gave the California example, understand which ones apply to you. The higher the profit, not income, the higher the profit, the more likely it makes sense for you to be an S-Corp. There's my bow.
Oh, it's succinct bow. Love that.
Okay.
All right, before we move on, Heather has shared some wisdom with us. If you now are aware of whether your business should be an LLC or an S-Corp, and that by itself is wrong, you got to give us something. A like, a comment, a follow, subscribe, and you also have to send it to your brother who said the S-Corp is the best thing in the world since sliced bread. Thank you. Moving into our next section of the podcast, it is called What Would You Do? Question number 1. At what income does it actually make sense to elect an S-Corp?
All right. I want to point out something that I read in this question. Do you want to know what I'm going to point out?
Yeah, because you said it a lot. It's not about income.
It's profit. So I want to tell the person that asked this question, it's profit, not income. So go back to your profit number. This is why I always say books matter, because people are always tracking their income. They're not tracking their expenses and how they're profiting a lot. All right. I'll re-say, if you're under 80K in profit, probably doesn't make sense. 80K to 150, you need to run it. Marginal benefit. 150 to 400, usually yes. 400K over, pretty much always. Done. Answered. Question 2, how low can I set my salary to maximize tax savings? Ugh, I want to answer so many of these questions.
I had a client come in who ran a vet practice.
Ooh.
No, she was an optometrist. I have a vet as well. She
Cool.
had 2 locations. She ran both. She paid herself $50,000 a year.
Too low.
So then I looked at her revenue and her books, and again, her profit. And I was like, this is a red flag potentially. Like, has your CPA greenlit this to make sure that it's an okay number? And she's like, no, we haven't really talked about it. Like, well, A, find a new CPA, because that's something they should have said. But you have to pay yourself the replacement salary of someone coming in to do your job.
Yes.
So $50,000 to run and manage 2 optometry practices? No. So for us, financial advisors, it's going to be between that 100 to 200K mark to be a top end financial advisor. If you're then making $800,000 in revenue, the rest can be profit. That's great. But the bar is, what does it cost the marketplace to replace you?
So what is your salary? Are you going to say that? Like, what do you pay yourself? This is not telling people what we make because we profit, but like, I had to determine what is my reasonable wage that I could justify if I was audited.
Yeah. So I put it down as, so my hours are probably not full-time because a lot of my time is marketing. Well, that's not a financial advisor's job. That's a marketer's job. So if someone was to come in and replace me doing financial planning work, that's probably 3 days a week. How much is that going to be in the marketplace? So I pay myself that, and the rest is profit.
Interesting. Yeah. So I agree with you. I think people mess this up a lot is that's where it concerns me, where CPAs are like, we'll just do a percentage, 50-50 or 60-40. It's like, no. That's actually not the law. It's reasonable wage. What is a reasonable wage? And I think with AI, this is what is being talked about right now.
Yeah.
The IRS gets smart. They can just run an AI employee to go through all these S-Corp returns where reasonable wage is low compared to profits. And those people are going to get audited. That is actually one of the biggest audit risks with an S-Corp. S-Corps are audited less, but it's pay yourself too low of a salary compared to your profits. Don't pay yourself a reasonable wage and you're just asking for it.
Well, it's wild that some people can file a tax return with a $10,000 W-2 and the rest is a distribution.
Like $1 million is you're just asking for it. Yeah. The answer is to how low, what can you justify as a reasonable wage? That's how low you can go.
Yep.
Okay.
Question number 3. I already have an LLC. Isn't that the same as an S-Corp?
No, it's not. You have to file an election form to be an S-Corp. An LLC is just a legal entity structure. So that does not tell the IRS, how you're taxed. So you need to file an S-Corp election form.
I think the confusing part comes in there is when we say, okay, an LLC is the asset protection structure. An S-Corp is also the same as an asset protection structure, but it's also the way you're taxed as well. I think that's where people get tripped up. Like, oh, so I can have an S-Corp, protects my assets, that's how I get taxed. An LLC, that is another way that I can protect my assets and a way I can get taxed. And it's not. Moving into the next section of our podcast, it is called Highlights. All right, Highlights is where you get to learn about us, personally, professionally. If you don't care for it, turn off now. We don't care. But this is probably one of the best sections of our podcast 95% of the time. Wow, that really undersold all of our content right there. Do you want to go first as your highlight?
I am a little woo-woo.
Never.
Well, it's weird because I'm so logical and like number-based. So it actually is surprising to me. Like the CPA is a little woo-woo. Okay. The universe is speaking to me. I don't know why, but I'm paying attention. So I am crafting my life after one of my life mentors, like someone I'm modeling that as a childhood, I loved how they lived. I've talked about it before, right? They had the small house and the humongous neighbor around all the big houses, impeccably interior designed. Funny, I just redid my house, right? Nice cars, spent most of their money on experiences.
Sure.
So not a huge house, more money towards living. One of those ways that they lived with the nice cars was they had someone come every week to detail their car. I will always remember because I'd walk home from the bus and there was the black car and it was and they had fancy rims and it was just getting all detailed. And I said to myself, one day I'm going to do that. Well, the girls are destroying my pretty Porsche Macan. I mean, the leather does not look great. I'm getting upset. It goes to the car wash and it's still not good enough. And so I said, I just was driving to the gym one day and I was like, well, what's missing from my ideal life? what's one of the things I can add in?
Okay, a car detail.
I was like, oh, the car detail. I still haven't done that. I kid you not. The next day I'm driving to the gym. This is really, really weird.
Mm-hmm.
In front of me pulls a van that is a car detailing van. I do not see these often.
Okay.
I can even send you the text picture. I took a picture of it because I didn't believe it. I'm going to call the van. I'm going to call the number on the van.
Good.
How weird is that the day you're driving, you think this thought, and then the next day it shows in front of you? Like that's not a coincidence.
Mm-hmm.
It's like the universe is telling me, Heather, go after your life. Keep going. Keep going. Okay, I have one more. My dentist, I'm just going to say this on the podcast because I'll eventually come out and say what it is.
Mm-hmm.
There's something big I'm going to go after.
You're going to become a dentist.
Maybe. Sure. Okay. My dentist gave me a number to call. I've had this piece of paper for 4 weeks. I've not called the number, but it is part of my dream. And my dentist of all people. My dentist. Like, what? The chances?
Did they know about the dream?
Yes, apparently. I don't remember telling them about the dream. So I have this number. It's on a pink sheet in my purse right now. I'm very scared to call it because I'm like, now I'm putting the balls in motion. But all I'm saying is it's really funny. You just pay attention. The universe is telling me Heather, it's your time. Go. I don't know. It's very interesting. I got to get up the courage, but
awesome.
I just want to share.
You're not going to appreciate my highlight. You're going to think lesser of me as a person.
No, I will. Come on.
Half the audience will as well. It's okay. You know I'm a gamer, right? I hang out with my boys on the games.
Yeah, I love it.
Not even my kids, other grown men.
I actually think it's really healthy. I'm very, with how we think in a day, you need to.
Okay. There's a new James Bond game coming out that looks
Cool.
exactly like Max Payne did back in the day. If you're not a gamer, you have no idea what this is.
Yeah.
Max Payne was the pinnacle of first-person shooter games. It's probably a third-person shooter game. I know I'm losing you here. It's okay. But it was so good, and they stopped making Max Payne. James Bond looks exactly like that, and it's very exciting because then I can play that going into GTA 6 coming out in the fall. We've been waiting decades for that game, Heather, and it's going to be beautiful.
When does it come out?
If it comes out in the fall, that will be a miracle because they've rescheduled the date probably 8 times.
But you're very excited for
Yes. I will probably take extended vacation when those games come out.
Are your gaming boys prepared to, you guys are all going to take vacation and you're just going to go and you guys talk into the microphones? Do you have one of those headsets with the microphone and you're shooting people and making jokes?
Yes. We make jokes and then take it too far and then have to apologize to each other. That's the type of relationship we have.
I love that for you.
Yes.
I love that for you.
But if you're a gamer, you'll appreciate this. Later this year, we will likely have a LAN party.
Do you know that actually with male friendships, this has been studied, females don't. We can sit around a table and just talk, right? Men actually need an activity, I've heard. You have to be playing pickleball, playing golf, gaming. So I'm actually very in support of it because community is a part of happiness. So I am not judging you at all. I'm very happy for you and I can't wait for this game to come out for you and your buddies.
It's very true. We helped a guy grieve his father's passing while we were shooting other people in the game.
See, it's beautiful. So I think when you look at it that way, I'm I'm so happy for you. Where I think my husband's searching for something like that, right? It's hard. You have to try to find that thing that you have a common bond. Men need that thing that they have in common.
Does he want to be a gamer?
I will ask him.
He's very welcome to join us.
That's a good idea. I don't know what I will cause though.
Oh, you'll cause a beast.
Yeah, that's I have to
You'll
think.
lose him.
I have to. The planner is playing this out. What am I giving up? What am I? But I'll ask him. Okay.
All right. Well, thank you for listening to this episode of Playbook of the Wealthy. If you want to keep listening to us on audio platform while you walk the dog, any audio platform that supports podcasts, you'll find us there. If you want to come home from walking the dog and watch the video version of the thing that you just listened to while walking to the dog, we're on YouTube, Spotify, Instagram, and then Apple Podcasts, where you just listen to the audio version. You can then listen and watch the video version of that. If that confused you, just go Google us. When you Google us, you're going to find our website. That's going to be playbookotw.com. And then when you're there, you're going to be I really wish that I could have a question featured on the show. If you want to do that, then you got to email hello@playbookotw.com, and then we'll put your question in an episode. This is probably the longest outro I've ever done, and I'm still going.
And you didn't interrupt. Wait, you didn't interrupt me on the whole episode. We didn't even talk about that. You didn't have to
I didn't interrupt you, but you know what you just did? You interrupted my outro. Thanks. We'll see you next time.
Please email your questions. I love them. Toodles.
All opinions expressed by Dave Grant and Heather Townsend are solely their own opinions and do not reflect the views of their respective wealth management firms. This podcast is for informational purposes only and should not be relied upon for investment decisions. Nothing in this material constitutes a solicitation for the sale or purchase of any securities. Clients of Retirement Matters and Townsend Financial may maintain positions in the securities discussed in this podcast.